Welcome to the Transparent FX Academy. I'm Nick and I'm a top order trading view with over 190k reputation points. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a very strong historical monthly support and demand area. From here, all these previous rejections to the upside were created. Every single time the market tested this zone, it got rejected to the upside quite aggressively. At the moment, the market is testing the same area once again as a strong historical structured zone and has already started rejecting the level to the upside. So in a situation like this, more bullish price action could be expected away from this area. So on the monthly, everything seems quite clear. Let's keep that in mind and drop down on the weekly time frame. From a weekly perspective, we have a clear inversion of trend. We can notice how the market went from the creation of weekly lower lows and lower highs to then the creation of this double bottom at this level. And now the market has shifted to the creation of higher highs and higher lows. So we had a perfect transition from a downtrend, which by definition is lower lows and lower highs, to then having an inversion pattern, which in this case was the double bottom, to then the creation of an uptrend, to the creation of higher highs and higher lows. So textbook inversion of trend. At the moment, the last move was the creation of a new impulse. The next logical step would be a correction and then the continuation to the upside, because that is how an uptrend develops. You have an impulse, correction, continuation, correction, continuation. These corrections give the possibility for new buyers to enter into the market and make the market not overextended to the upside. So in this case, a correction from this level would be a healthy correction before then more bullish continuation. That is definitely possible. We can also notice that as we have an impulse and now the start of the correction, if we want to measure it, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have the 0.382 and 50% retracements lining up exactly with this previous level of supply and resistance from which all this push to the downside started. And as we know, a previous level of resistance, once it is broken to the upside, becomes support. So now we have confluence of support and demand at this level that this market might want to go and test and then potentially to reject to the upside. Dropping down on the daily time frame, what do we see? Now here on the daily, this is where things get quite interesting. In fact, what we can notice is that the market is currently trying to go a bit lower, creating this daily M pattern. Now, an M pattern is a very effective pattern because it's a manipulation pattern. Retail traders, after an impulse and correction, when the market starts going higher, they tend to add longs and they have the stop losses below the low. So if the market then drops, all those stop losses get liquidated, giving the possibility for institutions to add even more longs, at that point increasing the probabilities of a potential rejection to the upside. We see here an example of an M pattern right here. After the M pattern, the market rejected to the upside. So there is definitely the possibility here, if the market from here will create this M pattern, to then see a potential rejection to the upside fueled by institutional longing. Now, speaking about institutional longing, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data for the euro, the first thing that we have to keep in mind is that if we are looking at the data for the euro, we're actually already looking at EURUSD, because all currencies on the spot are traded against the USD. And we can see how with the last reports, net positions went from 51.8k all the way up to 69.2k. So we had a massive increase of net positioning, showing how a massive amount of longs are getting added from an institutional perspective and shorts getting closed. We had 7,000 longs added, 1,000 shorts closed with the previous report, 6,800 longs added with the last report on EURUSD from an institutional perspective, and 2,400 shorts getting closed. We currently have 197,000 longs compared to only 127,000 shorts from an institutional perspective. So clearly institutions are already positioned to the bullish side and increasing their positioning to the long side for Euro USD. So let's keep all of that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, if the market here will go lower, creating this M pattern, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.